going on, traders? Welcome to the channel. My name's John. That's Groot. It's time to talk meme stocks. They're setting up interesting in the charts. So I think it's something worth pointing out that we can look at and see what's potentially in store for next week. So let's dive in. We're going to look at AMC, GME, and then the overall market and see if we can infer some ideas on what to expect from here. All right. We are in AMC looking at the daily chart right now. You can see a couple things, but what I'm seeing most interesting, we're building a wedge pattern. And what I find the most interesting as I'm looking here at, say the daily chart, is that in AMC, most of the big volume days were a little bit bearish, but as we kept trying to test lower, we did not break past that. So this was another big one. Most recent one was earnings day, and a little bit of a bearish day. However, the subsequent days after started to tighten up, and we are getting ready for some form of either a breakout or a breakdown to the downside. Let's go to the hourly chart. Let's just get an idea. Yeah, same idea. We're just seeing really tight bars now. What I found crazy is you look at the day when there is a sort of manipulative attack. I believe AMC was shut down too, but they closed down trading for like 5 minutes multiple times on GME. I believe AMC had that same issue, but nonetheless, you saw a big drop in the market in these stocks. And then I loved seeing the following bar was a recovery and on higher volume. That's good news. That looks good. But let's say if we see any upward movement, like a breakout to the upside, we need to clear about 12.50 or so. This $12 to $13 level is going to be a little bit of a resistance, but if we break out to that, we're going to start testing near that $20 level, getting closer to new highs again. If we go lower, there is little pockets of support everywhere, but I think about $5 to $6 will be one of the natural price points that this could lead to. So kind of risky, something to look at there. At least if planning on adding to any positions here, make sure you're keeping your risk in check. Okay, let's look at GME hourly bars. You're going to see this crazy wedge. It looks so beautiful, just very symmetric. It just plays so well, and then very bullish signs in terms of the volume bars. So this was same thing. This got stopped out and dropped from about 350 or so all the way to 180. That's nuts. And then what happened though, the recovery was massive, huge volume. And then since then, we've just been trading inside of these two big bars. So we are breaking out or breaking down. And either way, we're going to test one or two of these highs. And then if we clear that, we could go very high, either to 400 or so, and then off to 500, and then who knows. Or if it breaks down, we are testing back towards the 100 level and then the 80s. So that is something to watch out for and see. Same idea here. Am I trading it? I did make some money off GME last week, which was great. But at the moment, I'm probably going to stay on the sidelines, and there's a big reason why. Let me show you. As we go here to the overall market, I'm looking at the SPY S&P 500. What had happened a few days ago, last week basically, I had said, hey, we need to look at this recovery, and here's what we need to see. We're about right here, and we're going to start testing new highs. We need to blast past that, or we're going to see resistance. And right now we are seeing a little bit of a form of resistance. You're going to see that as we get to new fresh highs, we retracted. But then the other thing that's interesting to me is the volume was crazy lower. It's descending volume as we're rising higher. So there's not a lot of conviction to the upside. And then the VIX, which is volatility, this is what really concerns me, or at least makes me want to keep my risk in check. I'm probably planning on getting some of my bullish positions a little bit more neutralized or down to cash. That way I can take advantage in any drops in the market if that does happen. And if not, I have the rest of my account that is exposed to the long side. So here's what you want to look at. Okay, I'm on the daily in the VIX. And as we break this out, you're going to see this really massive support line right here. And that's key, because this, every time we hit this, we bounce off, the market drops. We come back down, test, bounce, market drops, test, bounce, market drops. same thing, and then we're getting down lower again. And every time there's a big spike in volatility, it's related to the market dropping, and that is where we are potentially headed right now. It is held all year long, and there's nothing I'm showing right now that says, hey, this might not happen or this isn't going to happen. So I'd rather be on the side of probability and at least position my portfolio so that I'm ready to take advantage in any big spikes or drops in the market there. So I hope that's helpful, but the other thing you want to look at is the strategy I have in market drops. You're going to want to check out this video right here.